Hey everybody, this is Sean Riley with Riley Real Estate and MassHomesale.com with this week's Q&A Saturday video. First off, I just want to apologize. I haven't done a video in a couple weeks now. Things have been pretty busy. Plus, I'm going to throw a little blame on you guys. I'm not getting very many questions. Recently, I haven't gotten any questions. So it's getting a little tougher to just come up with things on my own. And especially after doing this for over a year and making up a lot of the questions myself when I haven't gotten them. So send questions. I love answering them when people actually send them to me, but it's definitely getting a little more burdensome to put a lot of time into thinking up my own ones. So we might be a little more sporadic until you guys get a little bit better about sending them, okay? Also, hopefully you guys can hear me okay. Usually turn off the air conditioner when I'm doing these videos, but I turned off for about a minute and a half just to get things set up and started sweating like a pig, so hopefully it's just not too loud for you. Try speaking up a little louder, just in case. So anyway, this week's question. Actually, I had hoped to do this a week or two ago when I first started thinking about it, didn't have a lot of time or hadn't gotten the full outlay of what I wanted to talk about right away. So we're going to talk about how the Brexit is going to affect U.S. real estate. So those of you who know, the Brexit stands for the British exiting the European Union. A few weeks ago they took a national referendum vote and decided to actually leave the European Union, and as you probably know, the immediate aftermath was a lot of fear and selling off in a lot of the equity markets. So the stock market took a big hit for a couple of days, but since then it recovered very quickly. Probably within 3 or 4 days it was almost exactly where it had been previously. And I don't track the stock markets intimately, but I'm pretty sure that they are actually decently above where they were before the vote was taken. So the equity markets haven't really weren't really affected except for a couple of days of panic, which is pretty typical. The main thing that is interesting actually does have to do more with real estate. Maybe in the long run there will be more problems, but in other markets. But right now the most sustainable thing that's been noticed is right around when it happened, interest rates again took a little bit of a dip, and they've kind of stayed there. So it's actually cheaper to get a mortgage right now than it was a few weeks ago, and it's kind of been steady that way. Also, my own prediction is that something like this is going to keep the Fed from really doing anything with the interest rate hikes that they had been saying they were going to do. They did it that one time at the very end of last year, and then basically every time they were going to do it again, something happened and they decided not to. Not too impressed with Janet Yellen's toughness in as far as trying to get things back to normal on that. It's kind of joke that whenever there's a 15% chance of rain and somebody went home with a slight cold in the office, they can't possibly raise interest rates because of these unforeseen circumstances. So things such as the Brexit and all of the other international economic turmoil that seems to come up every couple of months these days, I feel is going to keep that from really changing anytime soon. The other interesting thing is there is a lot of talk that because of some of the currency things and some of the uncertainty in the British economy, obviously the British are going to be affected significantly more than anybody else in terms of them leaving the European Union, good or bad. But because of some of that uncertainty, you see a lot of things that London especially, and some other places obviously, but especially London is a place where a lot of foreign money has gone to buy real estate. We see that a lot in some of the prime cities around here, like New York, Los Angeles, Miami, more locally Boston, Cambridge. You see a lot of foreign investors, especially, at least locally, see a lot of Chinese investors buying up blue chip real estate, and they did the same thing in London. Now the theory is that possibly they will have less money going into London because of the uncertainty, which means there could be more money coming into the U.S., even though you were seeing a little bit of that maybe not happening quite as much, but now it could potentially see more of it coming. What that will actually mean is hard to say, but it could just be another thing, another factor, something to keep in mind. No guarantee this is going to happen, but that's one of the theories. Like I said, the biggest impact overall is the mortgage rates. That has already happened, and it seems to not be changing as quickly as some of the other panic-driven changes that we saw immediately after the vote. And like I said, just general economic things, there's no reason to think the Federal Reserve, at least, is going to change anything anytime soon. So, overall, my feeling on the Brexit is that it will have little to no effect, at least anytime soon, on the U.S. economy, other than that immediate sell-off of securities and then immediate buyback. And I don't think the equity markets are going to be affected by it at all, at least not until more happens with it. The real estate market, you could see more U.S. investment because there might be a dip in investment in Britain. Maybe not, hard to say. I think the most tangible effect is definitely, at this point, without a doubt, the lowering of mortgage interest rates, which does make stuff more affordable again, good or bad, depending on what view you want to take of that. And I do think that has the best chance of having any kind of sustained impact. But for the most part, for the U.S., it's mostly a non-event. And I think it's going to continue to be that way. So that is my take on the Brexit. And so, don't freak out. I don't think it's really going to affect anything. I guess the one thing I would say is if I was a currency trader, I would have been buying pounds right now just because, I don't follow this that closely, but at least for the first couple of weeks, it seemed like they were steadily holding at like 1980s value. And I'm sure that they're going to bounce back, maybe not all the way back where they were like $2. A pound was like worth $2. But I'm going to guess that it's going to be stronger than it was at least a couple weeks ago. Like I said, I don't follow that closely. Maybe it's recovered more than I realized since then. But that was kind of the one thing I was like, ooh, I wish I dealt more with that kind of stuff because I think you could have made some money. Or at least wish I had a trip planned over there at that time. So, for the most part, don't worry too much about it. It's not going to affect too many things, at least not that much more than any of these other events that seem to be happening, like I said, every couple of months around the world, like various economic disasters. Any questions, or in this case, especially comments, feel free to leave them below. And as always, like I said, send me questions. If you have a question that you would like to see answered in one of these videos, you can always comment on one of the videos. You can fill out a form on the website. You can put something on our Facebook page, post it to our Twitter account, or send an email to info@masshomesale.com. I definitely hope to hear from you guys soon, and I will hopefully see you next week, and certainly, hopefully not too long if I don't get a good question for next week, all right? So send me questions. Until then, have a great time, and hopefully I will see you next week. Thanks. Bye-bye.